Tax season is here as the world marks 1 year of a global pandemic. For many, it was a year of unprecedented disruption in our personal and economic lives.
Taxes are, in many ways, a reflection of the real world and the real economy. So the real world and the real economy were a total mess in 2020, and so the tax season that we're having right now reflects that.
The U.S. government response to the pandemic and changes in your own life could combine to make this a potentially tricky year for taxes. Here's what you need to know. Congress approved 2 rounds of stimulus payments in 2020. Individuals earning less than $75,000 and couples earning less than $150,000 were eligible for the full amount. Taken together, adults at these income levels were eligible for $1,800 from the government, plus an additional $1,100 for every child under 17. Many people quickly received the full amount that they were entitled to, but others didn't.
The IRS has the information it has that you've sent them before, right? So when they decide how much to send you, and they're looking at, okay, what's your income and what's your family size, they're going to just pull from the information they had. So in March of 2020, they were pulling from 2018 returns and 2019 returns. If your income went down in 2020 from being ineligible or partly ineligible to fully eligible, then you can use your 2020 tax return to claim the rest of that money. Let's take an extreme case of an individual who made $150,000 in 2019, and so they didn't get the $1,200 payment, they didn't get the $600 payment, because all the IRS knew is, oh, this is someone who made $150,000. If that person then in 2020 made $50,000 and would have qualified for the full payments, then you can go ahead and claim that full $1,800 on your 2020 tax return. And there are also circumstances where your household might have changed. So the most common case would be you had a baby during 2020. The IRS would have no way to know about that until you send in your 2020 tax return. And so you'll be able on that to claim $500 from the first round and $600 for the second round.
But what if you're one of the lucky ones that had a good 2020? Don't worry, you can get more stimulus money if you're owed it, but the IRS won't take any stimulus back.
So let's take an example of someone who made $50,000 in 2019. They got a full $1,200 check in March, a full $600 check in December. So that's $1,800 based on the income that they had to qualify within that range. And then you had a good 2020. You were one of the lucky ones, and say you made, as an individual, $120,000. You wouldn't have qualified for any money. That's okay. These payments are not taxable.
No matter what the circumstances are that have changed, if you're owed more stimulus money, you can claim it on line 30 on your tax return. There's also now a 3rd round of stimulus payments that Congress passed in March. These aren't relevant to your 2020 taxes, but filing your 2020 taxes will update the information the IRS has, so it could help you get the full amount you're entitled to sooner. The pandemic closed offices this year, so many workers set up home offices or relocated for more space.
The IRS, from the federal perspective, if you're working in Maryland or Virginia or New York or New Jersey, it doesn't matter to them. The federal income is the same. But it can have significant state tax consequences. Some states, like New York, are known for being particularly aggressive in enforcing their state tax laws and trying to expand the boundaries of the work that they're taxing. Other states may not be. In general, if you ended up spending the year working in a state where you live as opposed to the one that you used to commute to, it's worth taking some time to figure out how that state pairing works together.
Millions of people lost their jobs as a result of the pandemic in 2020, and Congress funneled assistance to many out-of-work people through state unemployment systems. Many first-time recipients were surprised to learn that unemployment benefits are taxable income, and that they might be facing a large tax bill if they didn't have enough tax money withheld from their unemployment benefits. But in the law passed in March 2021, Congress moved to prevent these surprise tax bills.
What Congress did in March retroactively said the first $10,200 of unemployment benefits per worker are exempt from taxes for households making up to $150,000. Took away that surprise tax burden for a lot of people. It's going to save about $25 billion to those households.
Since this law only passed recently, some recipients have already paid taxes on the first $10,200 of their unemployment benefits for 2020, either through withholding or filing early. If you're one of those people, don't worry.
If you filed your tax return and then basically paid taxes on your unemployment benefits, the IRS says don't do anything. don't send in an amended return. They're going to do the math themselves and send out refunds to people who are in that situation.
Thankfully, the IRS has given taxpayers a little more time to figure out their taxes from this strange and difficult year.
The filing deadlines this year, we're all used to April 15th being April 15th, but this year it's not. For most people, the deadline to pay your 2020 taxes is May 17th now, not April 15th. If you're in Texas, Oklahoma, or Louisiana, because of the storms, all the deadlines are pushed to June 15th.